Hi, everybody, and thank you so much for joining Master Stroke. I'm Brijesh Dalmia, and with me, we have a special guest today, Mr. Vijay Mantri. He's a big man all over social media, all over the country, doing his training programs, and he's the wonder boy of mutual fund industry, who always talks very positive about mutual fund distribution business, growth potential, and today he's going to share about markets at 65,000, what to do. Welcome, Vijay.
So first of all, thank you very much. People keep introducing me as a trainer. Actually, I'm not a trainer. I'm an entrepreneur. So ultimately, whatever I tell people, it should result into business. Knowledge is secondary for me. More important thing is that कि धंधा होना चाहिए. अगर धंधा नहीं हुआ तो फिर वो खाली ज्ञानबाजी होती है. So my entire focus, whatever I deliver, is basically how to grow a business. And I'm extremely positive about the mutual fund distribution business, and I'm more positive about mutual fund distributor MFD business. And I've traveled across country in last almost a year and touched base with perhaps more than 10,000 MFDs. And I'm very happy. And Brijesh, there's a lot of recall about you. People tell me, oh, we came to listen to you because we heard you in Master Stock. So it's great.
Thank you. Thank you so much. We are all excited to hear your fresh perspective today. So Vijay, first question first.
Yeah.
65,000 Sensex. मन करता है माल बेच दें.
That's a very good question, but the question is that माल तो बेच दें लेकिन करोगे क्या पैसे का? That is as simple as that.
डर लगता है कि बहुत मुश्किल से इतना इंतजार करने के बाद में क्लाइंट के पोर्टफोलियो में 12-14% का रिटर्न दिख रहा है. After waiting of 2 years, 3 years, time value of money loss, and the client is saying that, what if markets fall? How to address this question of the client?
So the market may fall and market will fall. There's no doubt about it, because that is the way the market function. The question is that when someone asks कि अभी बेच देना चाहिए क्या? So basically, essentially, he's looking at timing the market, which actually is not in the hand of anybody. Whether somebody say अभी market में पैसा डालना चाहिए, अभी markets में पैसा निकालना चाहिए. The essential question is, the expectation is timing the market, which actually nobody gets it right. The second way to answer this is that if you take money out, what will you do with that money? So either we have a very clear strategy if we are taking money out. Either we are taking money out because our asset allocation limits has broken and that's why we want to bring it down, absolutely fine. If we want to take money out because we need money, absolutely fine to do it. But looking at the market level and taking money out is not the right thing, until unless you put a strategy in place. So I will tell you what strategy one could have. That is my understanding. If somebody is feeling nervous about 65,000, then at what level the person would like to invest? Let's put that number right now. So 63, 62, 61, 60, whatever those number could be. Let's put that number in place. The question is that once you take money right now, suppose you have invested 10 lakh rupees and the value of 10 lakh has become 20 lakh rupees. Now you want to take 20 lakh rupees out from these level. Then basically on 10 lakh rupees, you have to pay 1 lakh rupees tax. So you have to pay 5% tax. So in 65,000 market, if you are restructuring, the market has to be at least 3,000 points below this level for you to make break even. That is the point number one. The point number two, how confident you are that you're able to put money at that level. Because what happens that people say, we will invest when the market correct. But unfortunately, when the market correct, suppose the market goes to 58,000 level, at that time, the news flow will also be a 58,000. So the price 65, but we want news flow. We want price of 58, but news flow of 65. Both these things actually does not happen. So even somebody want to take money out, I would advise them, if you want to take money out, transfer that money into equity saving fund or balance advantage fund or multi-asset fund. And when the market correct, these fund perhaps will correct less. At that time, take money out and switch into 100% equity fund. That is the one strategy one could adopt. Second strategy one could adopt is that take money out and put that money into 12 to 24 month STP. And whenever market correct, put more money into equity fund. But that is actually easier said than done, because every MFD have 50, 100 customer I don't know whether they're able to call everybody and do these kind of things. Looks very, very difficult to me. So that is the second thing. And one of the very clever way, which I don't think is a good way, if anybody approaches, say, please take 50% out. So if the market fall, 50% is in debt. If the market rise, 50% in equity. But that I think is a clever answer, but sometimes it works.
So for the benefit of audience, what I picked up, and that is why Vijay is Vijay. I don't know how many of you noticed the first point he mentioned was simply brilliant, apart from the second and third point also. He said, if you're paying taxes after switching or booking profit, 3,000 point, 2,000 point to wahin chala gaya. So all the MFDs, I want to tell you, pick up these nuggets from today's talk. Some of the ideas which you can pitch to the client to stop their redemptions. This example you can give that at 65,000 rupees, if you, let us say, switch or redeem 20 lakh rupees on which you have made, let us say 7 lakh rupees of profit, on that you are paying 10% of taxes, that is 70,000 rupees, which is 3.5% of 20 lakh. So with 3.5% means कि 2-2.5 पॉइंट सेंसेक्स गिरेगा तब तक तो ब्रेक इवन है आपका, यानी कि आपको बेच के कोई फायदा नहीं हुआ, बिकॉज उतना तो टैक्स ही दे दिया आपने, यानी ये इंश्योरेंस है, हेज है आपका 3,000 पॉइंट 4,000 पॉइंट. तो now this is even in my 20-year career I never thought like this, which the Vijay just mentioned in point number 1. So all of us are doing business and you all are smart, but then again when you meet people like Vijay Mantri, you get that idea which you can add, and please write in the chat box whether you like this idea and how many of you do this idea. So thank you so much, Vijay, this was excellent. And if you have any question, friends, please write me in the Q&A box. We will have a lot of questions today with Vijay, because I will have few questions probably, and then you can have more questions. Vijay, you want to share some presentation here? Markets at all-time high?
Yeah, it is there. So market at all-time high. The first of all-time high doesn't mean the market is in bubble or market has some growth. So I'll give some historic perspective. It is very important, and you can use these slides with your clients. And I'll also give you a solution in the end of the presentation. So allow me to run through the presentation.
Yes, please.
And then, so if you and this is my Brajesh, my Twitter handle. People can follow me. Every day I put something on the Facebook, on the LinkedIn, on the Twitter about equity mutual fund and particularly MFD. And I run a YouTube channel where I speak on simple Hindi. I release a video today about market at all-time high and why investors should do what they should do. But most important part in my video is that in the end of my video, I do communicate, please consult your mutual fund distributor. Earlier, I used to say financial advisor. Now I moved that from the mutual fund distributor. So it helps the MFDs to take this forward to the client. So first of all, I would like to run you through what happened in 1992. There are three big markets, 92, year 2000 and 2008, and what happened at that time. Because in 92 and in 2000 and 2008, market rose all-time high, but then the market tanked more than 50%. Market follows more than 50%. The biggest concern people have today is this market, is the market like 92 or 2000 or 2008? So I'll share some data with you. If you look at April 92 market, 1 year return was 97%. 3-year return was 77% compounded. Basically, your 1 rupees has become more than 5.5 rupees. 5-year return was 53% compounded. So your 1 rupees has become 7 to 8 rupees. And 10-year return was 32% compounded. Market has gone up 15 to 16 times in 10-year period. That was a scam-driven liquidity where there was no mutual fund. Effectively, only institution was LIC and very little retail participation. So it didn't take much time to, it was just 6,000 crore of the money which has gone from the banking industry to the equity market, and we saw 15 times, 16 times growth over a 10-year period.
This period is 82 to 92 or 92 to 2002?
It is 82 to 92. So if you look at 10-year period, 82 to 92.
Okay, right.
If you look at 5-year period, 87 to 92.
Correct.
If you look at 3-year period, 89 to 92. Okay. So see, this is a period where I was doing my CA in 87, and we saw everyday market galloping. When I started my career, the Sensex was 780 only. Okay. And then we saw the market galloping, and for good or bad reason, I didn't have much money, so I could not participate. That was a great, I think, luck favoring me at that time. Else I would have made the same mistake which most investors made at that time. Now, if you look at Feb 2000 market, it is a very different kind of market. And this market I participated. And this market was completely driven by TMT, telecom, media, and technology stock. How much so that the entire Bharat Petroleum was available at the market cap less than the value of cylinders. So that was one market. So market Bharat Petroleum was available at 400 crore market cap, and the total number of cylinder they had, if you multiply at the given rate, the value of that itself would be more than market cap. But one segment of the market was going at crazy valuation. So if you look at number, 1 year market return was 45%, which is okay, a little high. 3 year return was okay, 17.5%, and absolute term 62%. 10-year return was 10% compounded, 61%, and 10-year return was 21%, close to 6-time growth in the portfolio. But what happened in the mutual fund? Average category return was 73% over 1 year. The worst perform equity mutual fund during that period delivered 55% return. It was the worst perform. And the best perform equity mutual fund delivered 366% return. And there was only one tech fund at that time which completed 1 year. That was a Franklin India Technology Fund, and which had gone up 4.5 times in 1 year time. And if you look at 3-year return, is 330%. So that was the market of year 2000. If you see, I'm sharing the screen here. These are the return 1 year, 3-year return of the market. If you look at SBI long-term equity fund, it delivered 366% return. Birla ESS 308% return. Tata India Tech Saving 320% return, 1 year return. And then you look at 3-year compounded return. The story was completely incredible. The fund which has participated in the tech has delivered fabulous return. The fund which has not participated in the tech, like UTI FlexiCap, had a very low tech exposure. It didn't deliver too much. It was 59% only. So it was now compare this with what is happening right now. I'll come to that as well. Now, 92 was a scam liquidity driven. 2000 was TMT driven market. Now look at what happened in 2008. In 2008, last 4-5 years, we have seen huge uptake in the economic activity. Economy perhaps was overeating at that time because of easy money available in the global market. GDP growth was 9.6%, and almost 5-6 year GDP growth was 8% plus. Credit growth was 23%, and consistently above 15-16%. If you look at GDP number right now after COVID, actually it is effectively 4-5% only. Credit growth now it is picking up, but if you look at data for last 5 to 10 years, they were in single digit number. IIP number was very high at that time. And all that, what happened, everything finally translated into EPS growth of Nifty. So EPS growth of Nifty in 2008 was 43% compounded for 3-year period. For a 5-year, it is 30% compounded. And for a 10-year period, the earning compounded at 20%. And if you look at number right now, 5-year EPS growth is actually only 13%. And 10-year EPS growth right now is actually just 10% compounded. When you look at GDP compounded at 13 to 14%, this is actually below long-term averages as far corporate profitability is concerned. So 2008 market economy was overheated. That resulted into super normal profit growth, profit cycle for Indian companies. And so much so that the total corporate profit as a percentage of GDP had reached 2008, 8% of GDP. That has come down below 2% during COVID time, and now it has went up to 4%. So if you look at last 10-12 years, actually corporate profitability has continued to disappoint, except in last couple of years post-COVID, we have seen recovery happening. So earning expanded, P multiple expanded. It was a combination of both. P multiple was 28, book value was more than 638, market cap to GDP was 149%, and dividend yield was below 0.9%. What this had resulted into is amazing return on equity mutual fund. If you look at 2008 ka number, the last 5-year return of all diversified equity mutual fund was 50% compounded. Last 10-year return was 34% compounded. So if you look at an absolute term, 7-time growth, 7 to 8 time growth in a 5-year period. In a 10-year period, 17 to 18 time growth. And if you look at number now, in July 2023, 5-year CAGR of Nifty is 1236, 10-year CAGR is 1250. Yes, a small cap CAGR is 20%, but that is because we are comparing the number from 2013. It is very important to remember the bear market was not of 2008. The worst bear market we have seen was 2008 to 2013, where lots of money went out from the equities to real estate. So 2008 to 2013 was a very, very painful period. And from there, we picked the data 2013 to 2023, where small cap has delivered 21%. But I was just doing some number crunching. So I looked at just 15-year return. 15-year return of equity market has been 14% in India, which is actually in line with GDP growth. So in my opinion, this market, from any stretch of imagination, from a macro, from a liquidity perspective, from the corporate earning perspective, and the return on equity perspective, is actually not at all a market in froth. Yes, it is all-time high, but all-time high and froth can be entirely different. So for instance, Sensex touched 21,000 in January 2008, then it tanked and then came back to 21,000 by Feb 2014. But from 21,000 reached 22, 24, 26, 28, 30, hitting 80H all time, but it didn't have bubble of froth. I see similar situation here. I don't see big correction, 5, 10, 20% happen every year, but I don't see beyond that any sort of correction in my opinion. So this is my understanding of 92, 2000 and 2008. And I have some other ideas, but I would like to, whatever I have presented, Brijesh, any question from your side, then I'll
Yes, Vijay. So we can stop the presentation.
Yeah.
So Vijay, there are two kind of mutual fund distributor attending this program, and we will watch the videos later on. First, जो खुद कंफर्टेबल नहीं है 65,000 के इंडेक्स में, और दूसरे जो कंफर्टेबल हैं. मैं आपसे एक क्वेश्चन करना चाहता हूं कि जो डेटा पॉइंट आपने दिखाया, there are mutual fund distributors who themselves want to book profits, fearing that the money can come down, ROI can come down, behavior angle से book करना चाहते हैं. उनके लिए क्या सजेशन है आपको? किस सिचुएशन में उनको प्रॉफिट बुक करनी चाहिए? उनको किस तरह से क्लाइंट को हैंडल करना चाहिए, या उनको आप कैसे कॉन्फिडेंस दिला सकते हैं? फॉर एग्जांपल, बहुत सारे डिस्ट्रीब्यूटर हैं जो 3-4 साल से 5 साल से इस बिजनेस में, उन्होंने क्रैशेस देखे ही नहीं है, उनको डर लग रहा है अभी कि क्रैश आ सकता है. 2018 2020 उनके सामने में था, 2008 में हिस्ट्री वो पढ़ते हैं. व्हाट विल यू से टू दोस डिस्ट्रीब्यूटर हु आर नॉट कंफर्टेबल विद द मार्केट?
See, there are 2-3 ways to look at this. One is that if you take money out, suppose your portfolio IRR is 14%, 12%, 13%, whatever. If you took a right decision where, suppose you take money out right now at a 65,000 level, and the market come to 60,000 and 58,000, and again you invest clients' money. Now you have to pick CAGR from 58,000, provided you get a timing right. So you have 10 lakh rupees invested, which becomes 16 lakh, 17 lakh rupees, and the portfolio CAGR is 14, 15%. Even you're able to get back the client's money at 58,000, you'll not beat that CAGR. It is impossible to beat that CAGR. So suppose you are 14% CAGR, the market correct by 10 to 15%, your CAGR may drop, which is fine. The way to handle client is very simple. Whenever you have a great return on the portfolio, to the same client, show the return when the portfolio return was not very good. So show the return of March 2020 and show to the client that in March 2020, this portfolio had a return of maybe negative or 6%, 7%, but you stayed invested and you made money. So there's a one way to answer this question. The second way to answer this question is that, as I told, you can give allocation into multi-asset fund or balance advantage fund or equity saving fund. Whenever the market corrects, the correction among these fund will be lower. Then at that time, you should be able to switch the money of the client. Or third alternate, you switch out and then do STP or 12 to 24 months. But that CAGR of that portfolio will be very difficult to beat the CAGR of current portfolio.
So one thing is very clear, Vijay. What you are telling is that, given a choice, Sensex is just a number. And all of us know that in 5 year, 10 year, 15 year, this number will be above 60,000, 65,000. Most probably it has happened in the past. How to convince the client? What are the data points in a simplified manner? So there are half of the mutual fund distributor, let us say, are convinced that the markets are 65,000, थोड़ा correction होगा, tax देंगे, क्या फायदा है, hold करते हैं, long term जाते हैं, वो तो समझ रहे हैं. What should be their pitch to the client in simplified way to hold that investment, to guide them on the behavioral angle, how they retain assets, how they convince the client not to redeem?
So, funnily, one way to look at is that whenever you do a bank deposit, do you take a view on interest rate, or whenever you buy real estate, do you look at?
Vijay, I will stop you. Sorry for that. Friends, please write it down in pen and paper, some of the ideas which will help you convince the client, and then you can make a presentation out of that, WhatsApp messages kind of that, so that you can use these ideas. If not, you are already using. Vijay.
So one is that if you are, for instance, do a fixed deposit, do you look at what is happening on the interest rate? When you buy a house, do you look at, or you buy a property, do you look at what is view on the real estate market? Or when you buy gold, do you look at geopolitical risk or whatever? Do you take a view? Or when you buy insurance policy, or you continue to invest in insurance policy, insurance money also get invested in the same market where mutual fund money get invested. So timing the market is extremely dangerous thing to do. Distributor could show the data that this market last 5 to 10 year returns are not abnormal return. These returns are actually below the long-term averages return of the Indian equity market, below the absolute GDP growth of this country. So though, yes, the market is all-time high, but all-time high does not mean there's a bubble in the market. So we can give illustration of 21,000 coming back to 21,000 and then from 65,000. How many all-time high the market is made? By the way, in 15,000 trading days, the market made all-time high 5,000 days. So would you take money out of 1/3 time? What would you do? And also take illustration of taxation on the portfolio, how much tax you need to pay. So there is a solution to the money who's invested in the market and stay invested, because the market correct, the NAV correct, but when the market rises, the portfolio also rises. We have seen in last couple of years, even for the new distributor. But the money which kept waiting, actually it just remained waiting only. So that is my submission. Now every MFD have their own narrative to go and tell client, but unfortunate part is that whenever it comes to the equities, there's too much gyan goes around. So it unnerved many people.
Interesting. So one of the problem with the markets is that client can hold on, and it's mostly about the behavior. So clients are getting 15%, and some of the client insist that you should book the profits, and somehow you convince them that you should not book the profits, and then markets correct by 15%, and 2 years are lost, and returns from 14% is 7%. Do you think MFD should take this chance for clients who are insisting to book profits?
So then, see, I tell you, I'm not saying you should not book profit. Okay, be very clear in your communication with the client. If you say client, sir, invest करके रखिए, 10-15% करेक्शन मार्केट में हर साल होता है, होता रहेगा, लेकिन मार्केट कहीं जाने वाला नहीं है. आप सपोज आपकी सिटी में, आपके स्टेट में, आप कलकत्ता में, वेस्ट बंगाल के 200 बड़े इंडस्ट्रियलिस्ट के बिजनेस में आपको पार्टनरशिप मिल रही है. अब क्या होगा 10-15 साल, 20 साल के पीरियड में 15-20 बिजनेसमैन बैंकरप्ट हो जाएंगे, बट ये 200 और उसमें जो 15-20 बैंकरप्ट हो गए, उसके नए लोग आ जाएंगे. अल्टीमेटली आपको ये सब लोग ग्रोथ ही देने वाले हैं. 5 साल, 1 साल, 2 साल चैलेंजेस हो सकते हैं. So that is the one way you can communicate. Second way is that even someone insists, तो उनसे व्यू लेकर रखिए, सर आप बोल रहे हैं निकाल, चलो निकाल लेते हैं, अब बताइए किस लेवल पे पैसा डालेंगे हम. We have very clear रोड मैप की मैं 63 पे 5% डालूंगा, 60 पे 50% डालूंगा. Have that road map clear with the client. Or you can do STP. पैसा निकाल के आप STP कर दो. और सबसे सिंपल तरीका है, इंसिस्ट करता तो 50% सर हम निकाल लेते हैं,
कितने दिन की STP करनी चाहिए करंट सिचुएशन के अंदर?
12 महीना करना चाहिए मेरे साथ.
Okay, so this 1 point, not 6 months, not long term.
No, not 6. Because 6 महीने तो आपके देखिए अभी इलेक्शन आने वाले हैं. 6 महीने में तो स्टेट इलेक्शन आने वाले बहुत सारे. फिर अगले 6 महीने में सेंट्रल गवर्नमेंट के इलेक्शन आएंगे. उसके पहले बहुत अनसर्टेनिटी रहेगी. तो आप 12 महीने का STP करें आराम से.
एक क्वेश्चन जो आ रहा है विजय, ठीक है एग्जिस्टिंग पैसा नहीं निकालेंगे, नया पैसा लेना चाहिए क्या क्लाइंट से? अभी
नया पैसा लेना चाहिए, लेकिन वो पैसा आपको मल्टी एसेट फंड में लेना चाहिए, बैलेंस एडवांटेज में, इक्विटी सेविंग फंड में. और जब बाजार गिरे तो आप वेरी क्लियरली उसको स्विच कराएं मेरे हिसाब से, कि आप नॉर्मल डेट में लेके उससे आप STP करें 12 महीने की. और एक्चुअली ICICI का बूस्टर STP इज अ वेरी गुड प्रोडक्ट. आई थिंक लोगों को समझाना चाहिए. मतलब मुझे तो बहुत अच्छा प्रोडक्ट लगा वो, कि वो फंड हाउस अपने लेवल पे डिसाइड करता, तो 1 part ऑफ द मनी कैन गो देयर एज वेल. और अभी तो डेट में भी आपका अच्छा पैसा बनेगा. बाय द वे 3-year कॉर्पोरेट बॉन्ड हैज टच 8%. तो बहुत अच्छा टाइम है डेट के लिए. वो डेट में भी क्या हो गया ब्रजेश जी की, अभी 1 साल का रिटर्न भी अच्छा लग रहा है.
करेक्ट. नई SIP बेचनी चाहिए क्या अभी, और क्यों? क्योंकि
SIP
अगर हाईएस्ट भाव पे आप SIP स्टार्ट करेंगे तो क्लाइंट बोलता है हाईएस्ट भाव की SIP है, और मार्केट्स गिर जाएंगे तो SIP से कॉन्फिडेंस घट जाएगा. सी आई एम प्लेइंग द डेविल्स रोल. आई
नहीं
वांट
नहीं,
यू
आप
टू आंसर दिस
बिल्कुल
क्वेश्चन.
बिल्कुल नहीं. ये सवाल लोगों के मन में है. मेरे भी आज एक वेरी सीनियर गाय फ्रॉम one of the private bank who actually incidentally heads the investment product is my client. So he was talking to me and he was asking the same question. When you wear a investor's hat or when you advise a hat, they are two different things. बोला क्या करना चाहिए विजय यार, अभी SIP नया चालू करूँ कि नहीं करूँ, मार्केट गिरेगा तो क्या होगा. I told him very clear, look at 2021 at 18,600, suppose you started SIP. Then the market reached 15,500. Okay. You wish when you start SIP, the market should fall, because the 15,500, 5-6 month, that level gave you all the return of equity market. But you cannot start SIP at 15,600. That be very clear about it. Okay. So you continue to do SIP, and the best period in the SIP is actually, I have this famous saying, in SIP, good returns are good return, but bad returns are great returns.
Very nice, very nice, very nice.
तो
Okay,
आप
so
बोलो क्लाइंट को कि देखिए इक्विटी मार्केट में या तो वॉलेटिलिटी अपफ्रंट आएगी या रिटर्न अपफ्रंट आएगा.
Vajanti L22 लिख रही है. And friends, it's time for Q&A because the message is very clear from Vijay. Hold on to your investments. If the client is insisting to book profits, some of the profits you can book.
और अच्छा, मैं ब्रजेश जी थोड़ा एक और चीज और शेयर करना चाहता हूँ वेरी फास्ट
Yes,
विद आवर पीपल.
please.
सो ये मैंने एक्चुअली ब्रजेश जी, ये मैंने काफी जगह जाके शेयर किया, बट इज वेरी इंपॉर्टेंट पीपल टू लुक एट इक्विटी compared to, this will help MFDs equity compared to any other asset category, have something amazing called EPS, which grows, earning grows. तो ये आपको देखिए मार्च 2000 टॉप मार्केट था, उसके बाद बाजार गिरा है, और किस किस तरह का बाजार गिरा है, आपको निफ्टी के साल 10 साल के रिटर्न है. देन यू सी क्यूमुलेटिव निफ्टी रिटर्न फ्रॉम द पीक. This is how the nifty return has been. And if you look at EPS, this is how the EPS has been. Now what you see here is very, very interesting. At 1714, the EPS was 67, the P multiple was 25, and the earning yield was 3.9. If next year the market fell 32%, but earning gained up 7.5%, the EPS became 16, P became 16, and the earning yield become 621. Next year, EPS grew 8.3%, so cumulative EPS growth has been 16%. P multiple came below 15. And you see these numbers, this number would help you that ultimately it is the profit growth which drive. So even if you bought at the market at the top level, it doesn't matter if you don't sell at the panic, because unlike any other asset category, a 100-gram gold will only have 100 gram, where the price will be driven by demand and supply. In case of equities, you have something very, very amazing called earning. So आपका 100 रुपए, आपको 1714 रुपए का एक फ्लैट था, उस पे 67 रुपीज रेंट आ रहा था. रेंट 72 हो गया, 78 हो गया, 92 हो गया, 131 हो गया. तो अगर रेंट 131 हो गया तो अल्टीमेटली उस प्लॉट का प्राइस ऑटोमेटिकली बढ़, या यू कैन थिंक इट इज अ बॉन्ड.
Again,
this,
Vijay, brilliant point. All of you should pay attention to this another example. कि आपने कोई प्रॉपर्टी खरीदी और उसका रेंट हर साल 3% 5% बढ़ रहा है, तो इवेंचुअली जब आप प्रॉपर्टी बेचने की कोशिश करेंगे और उसकी रेंट अगर ज्यादा रहेगी तो प्रॉपर्टी के दाम अपने आप बढ़ जाएंगे, irrespective of what is the price there, because people will buy the property and put it on rent. So the same thing applies in the stock market, that if the earnings of the company is growing every year, then the market will go up automatically. Brilliant point to explain the client. Brilliant point. Please go ahead.
yeah. So, and what happened, Brajesh, is that unlike direct stock, equity mutual fund is not direct stock at all. Absolutely. Equity mutual fund give you a diversified portfolio. So for instance, if the money goes out and get invested in real estate, you have a construction material, you have a cement, steel, ceramics, tiles, plywood, you have so many company, pipe company. If people are falling sick, you have a pharmaceutical company in the portfolio. So whatever you look at, there are some people. So for instance, if you go and talk to any of your client, you have a relationship with any business. So I went and met a steel company and I say that we supply to OEM, and they say they squeeze us for prices because they make lots of money out of us. I said, why don't you buy the share of that company? He said, it's a good idea. So I said, don't buy a single company. You should buy a UTI transport and logistic fund, but don't buy a sectoral fund. You should buy equity mutual fund. So this is how you go and talk to a client. There are many points actually where MFD need to read and get confidence about these things. So Brijesh ji, ये मैं काफी जगह शेयर किया हूं, and the same data from 2008 peak to 2023. मैं आपको प्रेजेंटेशन भेज दूंगा, आप MFD को भिजवा दीजिएगा.
बिल्कुल भेज देंगे.
फिर ये मैंने कंपेयर किया है ईयर 2000 का इक्विटी मार्केट एंड 2008 का इक्विटी मार्केट, और ईयर 2000 के मार्केट में टॉप स्टॉक कौन थे और 2008 में टॉप स्टॉक कौन थे. और ये मैंने म्यूचुअल फंड की एनएवी ली है मार्च 2000 की और मार्च 2023 की. आप देखो मार्च 2000 में जो टॉप स्टॉक्स थे उनका कहीं अता पता नहीं है, और मार्च 2008 का जो फंड का एनएवी है ये है, और मार्च 23 का एनएवी है. इसके बाद तो इसमें 10-11% तेजी हो गई है. बट यू सी इन 20 or 23 years time, the fund NAV has gone up 20 times, 22 times, and these are all diversified equity mutual fund जो उस टाइम अवेलेबल थे मार्च 2000 के अंदर. तो इक्विटी म्यूचुअल फंड में आपको परमानेंट लॉस ऑफ कैपिटल कभी भी नहीं होगा. ये जनवरी 2008 के डेटा, आई डिड द सेम थिंग, and this is the way. If GDP is expanding, inflation is going up, 8 to 12% is the GDP expansion, and these are the various Sensex level. अभी आपका 10, 15, 20 साल का व्यू है, तो आप 60 पे इन्वेस्ट करें, 55 पे करें, क्या फर्क पड़ता है. इक्विटी मार्केट में आपको परसेंटेज पे नहीं, मल्टीपल पे ध्यान देना है. दैट इज वेरी इंपॉर्टेंट फॉर क्लाइंट टू अंडरस्टैंड. एंड दिस इज द लास्ट स्लाइड. इफ यू आर रियली स्कैर्ड about the market, then one of the best way to do, I looked at 92, 2000 and 2008 ka market, where you waited for 11 years to make money, or in 2000 you waited for 5 years, and 2000 you waited for 6 years. But suppose you did 12 to 24 month STP. In 92, the waiting period has come down from 138 to 18 months, and in 30 years, 24 times you made money, even you started your STP at the peak of the market. And if you look at data for Feb 2000, if you do 24-month STP, the waiting period came down from 57 months to 40 months, and you made 17 times money in 23 years time. And in Jan 2008 is just 12-month STP which delivered you. And these are data of November 2022. Now the numbers look much, much better. So even if you're scared, then do 12 to 24-month STP. I think that would be, in my opinion, ideal situation for our clients.
Brilliant. I don't know how you do such interpretations of data, which even some of the AMCs are not able to do, such neat, clean data. And thank you so much, Vijay, for this. One very good question, and I will scratch your head. Gyan Chand Jain is asking, at this point of time, what to do with underperforming equity fund? We fear that if we sell that fund and enter into a new fund, it will start its journey at the highest point, and then it may have a bad journey.
देखिए ऐसा है कि जैसे जब भी हम कुछ भी करें, हम we give 5 to 7 fund to the client. One of 2 fund will be underperforming. You can't escape that. So somebody asked me this question about Axis fund. So what I do is that I look at the portfolio. So I just look at, for instance, Axis blue chip portfolio. I open Axis Blue Chip portfolio and I see what are the top holding. So I ask client कि sir इसका number one holding ICICI Bank है, Bajaj Finance है, number third HDFC Bank है, Avenue Supermarket, TCS, Reliant Industry, Infosys, Kotak Mahindra Bank and Mahindra and L&T. क्या करें इस portfolio का?
Put the ball in the client's court and let him say that you should sell or buy.
तो फिर आपके portfolio में होगा ना सब कुछ.
I mean, this pause was excellent. I mean, this is brilliant, Vijay. You know, कि ये सारे शेयर है, बोलो बेचने के लेने हैं.
हाँ, बोल client को पूछो ना सर क्या करना है इनका बता दीजिए आप हमारे को, हम कर लेते हैं.
कर लेते हैं. Brilliant. So we can have a couple of questions. Vijay,
Yeah.
you can pick a few questions or you can.
नहीं आप बताइए मुझे.
Somebody is
pick
asking
करें.
that if you want to have you as a speaker in our webinar, then how we can make it? So you can Vijay Mantri के email IDs वगैरह उन्होंने share किए थे. You can contact him directly, no problem. And many people are asking that to share the PPT. Vijay, do share the PPT with us.
I'll
and
do that.
Share it
Yeah.
with.
Yeah.
Atul Vasani is asking, what is advisable to existing clients' investment in liquid? Should we go with STP?
I think करना चाहिए आपको. और अभी मुझे लगता है कि लिक्विड से अच्छा आप मनी मार्केट फंड में पैसा डालें. That is a better alternate. And if you can do this ICICI equity saving fund, I think is a great product to do STP in my opinion. So वहाँ रिटर्न भी ठीक रहेंगे, टैक्स एफिशिएंसी भी रहेगी. या इक्विटी आर्बिट्राज फंड आप चूज कर सकते हैं. मेरे हिसाब से इक्विटी आर्बिट्राज फंड has a great ability to capture movement in interest rate faster than any product, very honestly, faster than even the liquid fund. So use that. Don't go by default for liquid fund. The only challenge you have in arbitrage fund is that the switches happen after 2 days, unlike liquid fund where switches happen on the same day. There is only disadvantage you have, else it is a great product.
Puneet Mishra is asking, what should be the frequency of STP for lump sum, weekly or monthly? What is the
monthly
right?
करिए. Actually देखो White Oak ने data present किया आपके सामने where they looked at, तो SIP और STP similar है, so वो कोई फर्क नहीं पड़ता.
Sudhit is asking, what is the best way to reallocate portfolio in today's scenario? Moving from one fund to the other, should we do it one time or through STP?
देखिए मेरे हिसाब से STP is a better alternate to do that. But suppose you are switching a fund house, then it become a challenge in my opinion. But if you have a fund which is underperforming, just look at the underlying portfolio. Don't switch the client money just like that. Just look at couple of years back. Axis was topping the chart, Mirai was topping the chart, HDFC was in bottom. What happened today? He's completely rolled. So just tell client that look at 10-year, 15-year return of the portfolio and why you pay taxes unnecessarily. And also it become problematic for you guys when you switch from one scheme to another scheme. You CAGR start from the new number, which become very, very difficult in my opinion. And also learn from these things. Learn from these things is that don't give more than 15% allocation to any fund house, whatever happens. If you love somebody, go to 20%. But suppose you have just 4 or 5 fund houses to work with, then in my opinion, that become a challenge. And second thing, and I keep telling people in various forums, that if you pick one fund category from a one fund house, don't pick any other category from the same fund house. So for instance, if you give large cap to X fund house, don't give multi-cap or don't give mid-cap, because any fund house have just 15, 20 unique idea they work. And by and large, you find this unique idea across all the funds. So just keep that in mind.
Sagar is asking, interesting question, Sagar Kumat. And he's asking, please suggest large cap category and flexi multi-cap. Where should we invest? Because large caps are not able to beat the benchmark if you see for even 5-10 years data.
Ekdam galat information. I don't know from where you get this data. And I'll just spend some time discussing about it. Till 2015, there was absolutely no problem on the large cap. 2015 to 2020, there was a problem in the large cap. And very simply because post Modi ji came into power, there was a brutal economic reform. Many business model got completely rogered in the process. And because of that, profit pool was available only with few stocks. So if you see 2015 to 2020, of all the Nifty gain, only five stock deliver 85% of the gain. That was market was so narrow from 2015 to 2020. Second thing, if you see 2021 again, fund outperformed. 2022, there was underperformance. And for very simple reason, there was underperformance because in 2022, of total S&P's 500's gain, 49% came from Adani stock, 23% came from PSU Bank, 12% came from other PSUs, and 9% came from Reliance. But in 2023, it is completely flipped. In 2022 December end, only 30 to 40% large cap was outperforming. But if you look at data of 30th June 2023, 73% of the large caps are underperforming. There's a one part you need to keep in mind. And second, whenever you do comparison of large cap, never ever compare with TRI because nobody get to invest in TRI. Compare with the index fund. And the index fund return compared to TRI are 0.5% to 1% lower. Just keep that in mind. So when anybody asks you this question, and I can give some more data, I think Brijesh, we should do a active versus passive conference itself and get one passive guy to talk as well. So
okay, that will be interesting.
It should not look like a bias kind of thing.
Okay, so we are running out of time. We are already above our timeline, but I will have 3 more very quick questions, 10-50 seconds answers, Vijay. V. Ravi is asking, should one have to have allocations in index funds? Yes or no, or how much?
Yes, large cap, you can give out of total allocation of large cap, you can give 50% because you can't have that kind of intellectual discussion with the client. You don't have that much time.
So Dipto Shen Gupta is asking, when do we expect interest rates to fall?
Not very soon.
Because it was 696 and now again it is 715, 20 bits has gone up. Everybody has gone
up. Brijesh, for the last 3 years, I'm saying RBI will not able to do anything. Fed will not able to do anything. Inflation is a structural nature and very simple. For last 30 years, China was giving 100 rupees product at 85 rupees. Post-COVID, near sourcing, the cost of production has become domestic labor, domestic cost. So nowadays, at least for a couple of years, I do not think interest rates are going to go down in a hurry.
Which debt fund should we consider for our clients at this point of time?
If you're looking at 3 year, I think corporate bond fund is a great idea. Nippon corporate bond is debt. HDFC corporate bond is great. ICICI all season bond fund is great. But these are 3 year plus. But right now, even you can think of 1 year plus because you're getting 3 year corporate bond at 8% plus. So great time to look at these ideas. Below 1 year, you could look at money market fund, low duration fund. All across debt fund, you'll make good money.
Otto Kuchi is asking, please suggest one sectoral fund.
One sectoral fund, Nippon Pharma. It is not a sectoral fund. It is going to be the core fund in our portfolio. I just give you some data. 2017-18, the families which used to spend more than 10% of their household expense on medicine has gone up from 4% to more than 6%. The families which used to spend more than 25% of the household expenses on the medicine, which was below 2%, has become 4%. And we have 10% of the population above 60 years of age. Once and India become diabetic capital of the world, your diagnostic center, your hospital, your medicine, your drug manufacturing companies. And when you fall sick, you go to the hospital bills increases, your health insurance premium increases, everything is part of your portfolio.
So I will tell Swagata that today we have marketed Nippon Pharma Fund and Masterstroke.
Swagata, interestingly, Swagata knows. Shailesh Ban is my favorite fund manager. I just interviewed him. I'll release a video. And I myself is investor in his fund. And I've done my son's SIP into that fund. Only one fund I have done for him, Nippon Pharma.
Fantastic. Very interesting question. Vijay Babu is asking. There are 2 types of BAF model, pro growth and another one. So for example, Edelweiss keeps on increasing equity exposure as the market go up. ICICI keeps on decreasing, or other BAF model keeps on decreasing the allocation. Which one is your favorite and which works better in the long term? Very interesting question.
So actually, it's a very difficult call because in BAF, you should not look at which is beating what, because if you go by that logic, then HDFC balanced but advantage fund will outperform everybody else because they don't believe in too much of modeling. So it's very interesting. I don't think both these products are extremely though they're called BAF, but Edelweiss run more. They also look at price movement. Okay. and ICICI go by fundamentals. So ICICI more value and Edelweiss is more price. So if the market continue to do well, Edelweiss will do well. Else ICICI will do well. But I don't think these should be compared at all, in my opinion.
Okay. Vaijanti is asking, if a client has to invest 2 lakh rupees lump sum right now, should we take it 2 lakhs in equity or we should do STP?
STP karo, put money in an equity arbitrage fund, depend on what tax structure the client is in, and then do next 12-month STP into equities.
Amit is asking, should we do tax harvesting of 1 lakh rupees profit every year for all our clients? How should we do it?
Do for my client, but the only challenge is that when you do tax harvesting, the CAGR start with 0. So that the client need to be extremely aware about it.
Yeah, there's no end to questions. Certainly the questions have shot up, so but there is little time. So thank you so much, Vijay, for your wonderful ideas and thought process. And I really love the effort that you make to compile data. It is always an eye opener and always good to have you on our show at Masterstroke. We have done many sessions with you. Thank you so much for being available and enlightening mutual fund distributors. And may I request all the mutual fund distributors, please congratulate and thank Vijay for giving such valuable ideas, and we will connect again sometime in the future, Vijay.
Sure. Thank you, Brajesh ji. Thank you, everybody. Bye-bye.
Bye-bye.